Welcome to today's chart review. Today's Saturday. We're gonna go over Friday's action and the action that we had on Friday. And Friday's action was the cleanest that I've probably ever seen in a while. And we're gonna go over everything that happened. And I've looking back on this, like journaling this and taking notes on this. Like this was probably the best action I have seen, honestly. So we're gonna get into this. So if we look like bias surrounding the day. First, we're gonna talk about London. So we had this huge pump up higher yesterday, and I wasn't really scared by this. I wasn't really expecting this, and I also wasn't really expecting this, but it just ended up happening. So if we look on ES, our main bias is that we want this external higher time frame market maker sell model to complete. That's what we're looking for. We're looking for this higher time frame market maker sell model. And this is clear that we're in a market maker sell model on ES, on the higher time frame. Right here, at the beginning of the day, it might not be clear. It might not be clear. But the fact that we have an SMT, like this is just a retracement. This is just a retracement. You have an SMT here. This is just a pullback to OTE to then continue ahead price lower. I was not expecting a fast sell-off like this. Like throughout this whole market maker sell model, we pretty much just have a dump, a deep retracement, a dump, a deep retracement, a dump, deep retracement, and then a dump. Like there's not really much like it's just a dump and then retracement, dump and then deep retracement. All of these price legs, look at where we retrace to. Look at where we retrace to. OTE of this price leg. OTE of this price leg. And then OTE of this price leg. So this is like just deep retracement, deep retracement, deep retracement, OTE, OTE, OTE. So that's all we're doing here is just retracing and retracing and retracing. So if we look at where we're at, so to start the day off, we have an SMT at the highs. NQ has come up and taken this high, and I wasn't bullish. I was not bullish because we were in that higher time frame market maker sell model on ES. Like this is clear that we're in a market maker sell model. The draw is these lows. Like we have gotten displacement through lows and then displacement through more lows, and like this is just flowing like water, ebbing like water right there. And so come back up, we take this high, and there might have been some opportunity within London. When I was on live, someone was talking about this. I personally don't trade London, but this could have been an okay trade to maybe target this low. But I personally wouldn't really look to trade this, but we just have this 5-minute fair value gap. We pull back into OTE of this price leg. We sweep all of these highs, accumulation. This is your accumulation, and then you have your manipulation. And then you have that distribution leg to distribute. And after this, I honestly was not expecting this. I was not expecting this fast of a sell-off. But throughout the whole market maker sell model, we pretty much just sell off fast. Like look at all the times we sell off. We just sell off fast. You notice how the way up is just a little slower. Choppy, and then the fast sell-offs. So notice like the speed in price here. Notice the speed in price. The speed of price to go lower, and then chopping up higher. Like this is what you want to see when you're bearish on the higher time frame. Like if this is like a 5-minute time frame, this is what you want to see. You want to see those slow retracements up into these PD arrays to then sell off fast. And then this is what you want to take advantage of are these fast sell-offs like today. So we have this. I'm kind of like my day. I'm looking to see, are we going to support this fair value gap because I was like, hey, we could still be bullish, but no, it is not. Like I don't think it's a need to be bullish because of ES. You got to look at ES. ES, we have this 4-hour, and this is what I was saying Thursday. We have this 4-hour fair value gap here. And we also have this 4-hour breaker. We have a low, high, lower, low. So I'm really looking at this breaker. I want to see this breaker be held. We can mark out mean threshold of this breaker's body. We respect it perfectly, and that's what we did. That's what we ended up doing. So let's see if let's see if there was much opportunity within the day. And I honestly thought that the action was very clean. I thought I would rather take a trade on ES, just because if we look at NQ, over here, NQ throughout this whole way down, we are just failing to take lows, and we are just stacking lows. We are just stacking lows here. We are not taking any liquidity here, so we know that there's liquidity resting here and here. Like, these are our main focal points. Like, my eyes are here, and we'll go into that a little bit later. But let's just look at the action that we had. So right now, we're getting a retracement. We could kind of still be supporting this 1 hour fair value gap, but I don't care about this fair value gap. Like, looking back, I shouldn't really even care about this fair value gap, because the model is clear. When the model is clear on the higher time frames, that's when you're gonna get the best entries. Like, I shouldn't really care about this 1 hour fair value gap. Are we gonna support it or not because of that higher time frame? So then this is when we can look and see if there was opportunity. This is your first market maker sell model of the day. First market maker sell model of the day. We have plenty. So we have this. We take internal liquidity sweep. Let's zoom out a little bit. See, are we rebalancing to maybe a PD rate at all? Boom, we're rebalancing to a 15-minute fair value gap. The times in which we rebalance price to a 15-minute fair value gap, especially when the higher time frame draw is lower, that is when you're going to see that market maker sell model. And this is exactly what that is. Oops. Internal sweep of liquidity. Ideally, I would like to see displacement through a low. Ideally, I would like to see displacement through a low. So I think the best entry here, I mean, I don't mind an entry here. I don't mind an entry here off this fair value gap. But I think a better entry would probably be this fair value gap. But regardless, an entry here, I don't mind, because the higher time frame draw is clear. All right, and then this is what we're looking at. So I want to hop over to NQ. Yeah, so this is that market maker sell model, and then once it gets completed, I'm kind of just waiting. And this, okay, sorry, I was kind of vague with that. But this is when, like, if you take a short here, you gotta let your runners run. Like, say I take a short here, taking a risk on the internal model. Okay, I'm gonna take partials here. But days like today, when the market maker sell model is clear, like, this is a market maker sell model in an already existing market maker sell model. So days like today are when you can let your runners run. And today would have been a perfect day. This is what I'm saying, the internal draw with the external draw. So the internal draw is here, and the external draw is also lower. So these setups are going to be very clean and very nice. Pull back to that 15-minute fair value gap. Perfect entry. And this is another market maker buy model. Here. I actually ended up taking this trade. I don't love it because it is counter trend, because I think the better trades are going to be shorts on a day like today. On a day like today, I feel like the short trades are when you're going to get the best trades because of the external draw. So here we sweep internal liquidity. This also is an SMT. Then we get displacement higher. We have a breaker here. Low, high, lower, low. I don't love an entry off the breaker. I actually entered off the breaker, but I don't love it. But the best entry here would have been an entry off this order block, and then we end up returning to this original consolidation. I ended up taking this trade just to look to rebalance price, and this would have been a good trade because I was looking for price to get rebalanced here because we have a 15-minute fair value gap here, and then anytime we come into a 15-minute fair value gap, when the draw is lower on the higher time frame, that's going to be a 1-minute market maker sell model. So this could have been your market maker buy model. We have this original consolidation. We also have a 15-minute fair value gap. Remember, why does price move? To rebalance to equilibrium, to rebalance to an inefficiency, and to hunt liquidity. We are hunting liquidity, and we're also rebalancing to an inefficiency here. All right, let's pull up ES here because this trade on ES is just fantastic. This trade on ES is phenomenal. So at the time here, where's replay? Okay, right here. At the time, what are we doing here? We are rebalancing to this 15-minute fair value gap. 15-minute fair value gap. The draw is lower. We established the draw is lower. If I'm not confident that the draw is here, up here, I should be damn near confident that the draw is here when we're right here. So we're coming up into that 15-minute fair value gap here. Let me change this color. That's kind of toxic. So that 15-minute fair value gap here that we have right here. We also have a 1 hour order block that I was eyeing and I was looking at. I was like, how are we going to react to this order block? 1 hour order block, 15-minute fair value gap. Then let's draw our fib. Where can we possibly retrace to? Where equilibrium. Also, where can we possibly retrace to? OTE. Let's replay this. Come back. We tick OTE. And then this is then when you get our retracement into equilibrium of this price leg. We also end up forming an SMT here. This was a news candle right here, so I wouldn't love taking a short here, but it's also not bad. This also is if we look on NQ, we just completed this. This could have been, this is the higher time frame soup. This is the soup. This was my target, and this ended up being the soup. So at the moment, I just got out of a trade, and then I was immediately looking at like what price was doing. Had I not been in this trade, I feel like I would have been more prompt to taking a trade like here, because we have the SMT. This is the soup. I would have been more willing to take a trade, but the fact that I was in this long, I wasn't expecting this, but looking back, like this was so clean. So we have the SMT here. Immediately enter once you see that SMT. I mean, maybe not immediately, but I would say on this candle, because this is the news candle. You probably don't want to enter in on a news candle. I just wouldn't recommend it, because the news candle can really do whatever it wants. And then we end up getting displacement. We have a fair value gap here. This also is silver bullet, I believe. Then we end up completing this market maker sell model. Clean. This also is within that macro as well. And this, another trade where just let your runner run. And your runners would have done the work for you. This would have been a clean trade. Originally, if we look at NQ, we have all of these stacked highs here. I wanted us to soup these highs. I was looking for this to be the turtle soup to then head lower. That wasn't the case. We never came up and take these highs. That's okay. We also had this 5-minute fair value gap here on NQ. At the time, I wanted price. Where are we? I wanted price to come back up into this 5-minute fair value gap and sweep all these highs. But I guess we didn't have to, and that's also part of trading. Like, you're like, there are gonna be setups that you don't get. There are gonna be setups that you don't see. There are gonna be setups that are gonna run without you. Like, that's okay. That's a part of the game. Like, I was looking to, I would have entered short here, and price just ends up dumping the rest of the day. Okay, cool. Like, I missed out on a trade. Cool. There's gonna be more opportunity within the future. The moment that you sit there and you're like, hey man, I could have took a trade. Like, oh, this ran without me. No, there's always gonna be more opportunity. And here, so at the time, ES is now here. We'll play this. Let's replay this. Zoom out to the 15-minute. So now the draw becomes this low. The draw is this low on the higher time frame, and I'm expecting us to probably go to this low, but we've already ran a substantial amount. I'm expecting this to be the low. That we draw towards. Notice why I don't think that this is the low. Notice why this isn't the low that you want to target. This is the manipulation move. We have an SMT here. This is not a low you want to target. This is not a low that you want to target. So like you might look at this as low resistance liquidity, but you do not want to target this because it is the manipulation leg. This is a manipulation move. So you do not want to target this. And we'll see how price reacts off of that. So right now, the draw is lower. I'm looking for this low here. I'm looking to see how we possibly react off that low. We just completed a market maker sell model. We now have generated liquidity. We now have kind of this area here that we could possibly come back into on NQ. If we look at the highs we left, we have these highs that we kind of left here. So I'm just going to be a little bit patient. I'm just waiting. I know the draw is lower. We kind of just had a clean market maker sell model. We're waiting. And then this is when we take this low, we now have an SMT at the lows, but I don't really care about an SMT at the lows just because the draw on the higher time frame is lower. So I think saying that we have an SMT at the lows when the draw is still lower on the higher time frame, like I think there's no reason to really take a trade. And as you can see, let's zoom up to a 5 minute. We get that 5 minute change in state of delivery. I wouldn't hate a long wouldn't be bad just to look to rebalance price. Just to look to rebalance price to equilibrium. Once you get that 5 minute change in state of delivery, but I don't really like it. We also have a we should have a 15 minute fair value gap. I just don't think it's worth looking at trade here. I really don't think it's worth looking to take a long. All right, so we're waiting. Kind of want to see what price does. Here is we have this high here that we don't take. We never took this high on ES. We took this high on NQ though. So now we have an SMT. We're now retracing back where to a 15 minute order block here. This now becomes the 15 minute order block here. We just took buy side, internal liquidity. We also are still kind of holding this 15 minute fair value gap. It's not the cleanest. We have that 15 minute fair value gap. We took buy side internal liquidity. I would have ideally liked us to take all these stacked highs here, but we don't have to because the draw on the higher time frame is lower. So we have taken internal liquidity. We also do kind of have an SMT here. I don't love this SMT because ideally I would like to see ES come up and take these highs, but we don't have to. Okay, so we have internal liquidity swept, and then we get displacement. This could be a possible short here. Looking back, this was the soup. Looking back, yeah, a short here is good, and then target this low. Also let your runners run. And that's the other market maker sell model that I saw. Then here, there could be something. I don't love it. There could be something here. I don't love anything here. Maybe a fair value gap entry here. Like this is another market maker sell model. Like we just had a market maker sell model and then another market maker sell model. Like everything, like price was so clean today. I recommend definitely studying and just give your interpretation of what price does. All right, so ES here. I'm just gonna exit replay. We don't really need to be in replay. So okay, here, this actually does look a little bit better on ES. We take internal liquidity. Oh, this could be market maker sell model. We have these stacked lows. We could be heading to these lows. Nope. This is us just heading and generating liquidity here to then having this run lower. So like sometimes why we don't need to head lower. We're not going to go to these lows yet because we're just generating liquidity here. That's all we are doing here. Looking back, I do like this. Looking back, I didn't even note this in my PA. Like action today was so clean. There was so much opportunity. Okay, we generate liquidity to then have a stop run, a stop rate, to then have internal liquidity swept, to then have a manipulation. Once we get this manipulation, the SMT shows us manipulation. SMT is a tool to look at manipulation. So that SMT is what validates this. Then we get displacement through a low. This is textbook. I didn't even notice this until like right now. We get displacement, take that fair value gap to target these lows. I'm going to screenshot this. I'm going to put this in the Discord. I'm going to put this in the PA review. Give me 1 second. Oh my gosh. That is a good short. So like if you took a short here, like that would have been a good short. All right. So then we take liquidity, and at this point in time, if we look at the daily candle, like you could possibly anticipate a wick on this candle. That's kind of what the 315 macro is. So here is also another good opportunity to maybe look for something, because this is low a day here. We know most of the time that we're not going to close at the low a day. That's kind of what the 315 macro helps us. So like we're anticipating a potential run higher. And I do like a trade here. We have internal liquidity swept, market maker sell model complete. We have an SMT here. SMT here. To then, like, I can't mark it. SMT, market structure shift, pull back to fair value gap, 2022 model to target this original consolidation. This would have been a clean long. Like, I don't love it, but I also do love it at the same time. We have this original consolidation. We have stacked highs here. We have generated liquidity here. Low resistance. This also is what can you possibly target? Equilibrium of this price leg. Why does markets move? To rebalance the equilibrium, to hunt liquidity, to rebalance the inefficiency. So this here would have been a good entry, a good trade. Like, there was just so much opportunity today, and I thought that price action was so clean. Do you trade Forex? I do not trade Forex. I do not. The ES trade missed my entry by 2 ticks. Dude, that's exactly what I was looking for. That was exactly what I was looking to enter in on NQ, because I wanted to see all these stacked highs get taken to then head lower to also come within that 5-minute fair value gap. I was looking for us to take this high. I would have entered, but the better entry would have been on ES. I think ES had, like, ES, NQ, it really wasn't that clear, but ES had amazing action. What's good, IC? How you doing? Can you explain why original consolidation is so important? It's pretty much how I view it is it's like the start of the model. It's like the start of the model. So anytime we have an original consolidation, like, this is the start of the model. And then we trade away from that. So, like, when I take a trade, I'm going to target the original consolidation, because I know that that's where we started and where we're likely to finish. Yeah, price can go higher, but I'm really looking for this original consolidation, because it oftentimes is like low resistance liquidity. We have stacked highs here. We have equal highs here. So I'm just going to take my low-hanging fruit. Like, cool, yeah, we could go higher, but I'm really just targeting this. Hey, I could even target this high. But this original consolidation is pretty much just the starting point of the trade, and is also where we're likely going to finish. But today's PA was very clean, in my opinion. I thought there was, so right here we have a market maker sell model. Then we have a market maker buy model. Then we have a market maker sell model. Then we have a market maker buy model. Then we have a market maker sell model. Then we have I want to count that as a market maker buy model, but then we have a market maker sell model, and then we have a market maker buy model here. So, like, pretty much market maker buy model, market maker sell model, market maker buy model, market maker sell model. Like, this is price action that is going to be clean and clear and concise. All right, let's look at what we're looking at going in the future. Okay. So we know that we have these equal highs up here. We have these relative equal highs above us. This now acts, well, this doesn't necessarily have to be low resistance liquidity. I wanted us to take these highs, but we don't have to. If we look on NQ, on the 4 hour, like we are failing to take highs and we are failing to really take lows on the higher time frame. Like if we just look at NQ, like we have a bunch of liquidity resting here, and we also have a bunch of liquidity resting here. We're failing to take highs, we're failing to take lows. On ES, however, we have now just completed this market maker sell model. Let's see, isn't this a daily fair value gap? Okay, we also do have a daily fair value gap here. So this, and this also is like an order block here. So here, this area is a high confidence area to where if I am bullish, I would want to see us potentially bounce here. We have a daily fair value gap here, we have an order block here, and we have a low resting within that fair value gap. This could be the higher time frame soup. Notice how we have completed market maker sell model. So on ES, we don't necessarily have to go lower. This could be an area in which we bounce and then we head higher. On NQ, we have failed to take highs and we have failed to take lows. By looking at this, I would still be bearish. I am still going to be bearish on NQ because we have all of these stacked lows here. And now the draw to me becomes this low. But notice how we do also have stacked highs here. So it's kind of can go either way. Right now, I'm more bearish than I am bullish. But if we look at ES, we have the fair value gap. We also have that low within that fair value gap. Anytime we have a low that like barely taps that fair value gap, that's usually then when we come down, we sweep that low, and then this kind of acts as that turtle soup. So I wouldn't be surprised if we get higher prices. I would not be surprised because now this becomes potential targets in the future. But I would like to see how we react to this. It all depends. If, for say, we start to get displacement, we could then validate much lower. But right now, let's just look at this. Let's zoom out to the daily time frame. Where is equilibrium of just this price range? Okay. So still a little bit lower to go to equilibrium. We also have, oh, that's the daily fair value gap. We also have this daily fair value gap we could likely reach for in the future. I'm going to mark it here. So this could also be a discount array that we are heading towards, drawing towards. I want to see how we react off of this. How do we react? Let's look at NQ one more time. We have all of these stacked lows here. We have failed to take lows. We are failing to take lows. We have these stacked lows here and here. And then we also have these equal lows here. So right now, my eyes are drawn towards these equal lows. I really do want us to head towards these equal lows, and I'm going to potentially be more bearish and expect to see sell side of the curve here. I want to see this become sell side of the curve. And I want to see this play out within the next couple of weeks. But granted, there is a possibility that we could bounce up to then take these highs, to then head lower. But honestly, if we do work our way up, I would probably expect us to go into all-time highs again and then head lower. So it all depends. Like we could have another run of highs and then could finish market maker sell model. Because this, like we don't have to take this because ES has completed market maker sell model. NQ is just failing to take these lows. So we could come back up higher and then head lower in the future. But right now, going to be a little bit cautious, take anything. We have completed this market maker sell model on ES. I also do want to talk about this. Why this isn't, this manipulation move is what I was talking about. Like this has not become generated sell side because it is a manipulation move. Notice how price reacts off of this level. Like had this been a generated sell side level, we probably would have bounced. But look at price here. Look at price here at this level. We kind of bounce here. This is a market maker sell model. Sell side of the curve here to this low. Notice how we kind of bounce here. At this low, we do not bounce at all. Why? Because it's that manipulation leg. Like price is not going to treat this like it treats this low. And look how this low here. Look at how we also like kind of cause reaction, like we kind of bounce here. Here at this low, there is no bounce. We just run through it. We just run through this low. Like there's no bounce here. There's no bounce. There's just a run through that. Here, there is some sort of bounce, but this is not generated sell side. This is the manipulation like I was talking about. All right, so yeah, for next week, it all depends. I'm going to be a little bit more cautious. I'm going to let Monday probably set us up for the rest of the week. I'm going to let Monday kind of determine where we go. Do we have any news on Monday? Okay, at least we have red folder news. What type of news do we have next week? Core retail sales, Empire State manufacturing retail sales. Okay, that's good to see. 8:30 news. Powell speaks. I'm not too worried about that. Anytime Powell's spoken recently, it hasn't really done much, so I'm not really too worried about it. It will probably drive some volatility, but just because he speaks, I'm not really going to be too worried about it. He's probably just going to blabber about something that really won't move the market, but who knows? I would be cautious of it still. I'm still going to be cautious. I'm still going to note that he does speak, but I'm not going to be like, oh, Powell speaks, so therefore I can't trade anything. No, I'm just going to note that he speaks, but it is nice to see red folder news on Tuesday. Wednesday, we don't have anything. That's interesting. No red folder news on Wednesday. Thursday, unemployment claims, 8:30 news. Friday, no red folder news. Okay, interesting week. We don't have too much news. It's kind of like When's our next big news? Probably we have FOMC and NFP this week. Ooh. That's gonna be an interesting week, but obviously that's in times to come. But yeah, is equal low/high something markets create on Palpus to create liquidity, or is it something random? I don't know. I can't really tell you. All I know is that if there's equal highs, we're likely going to draw to those. Whenever we see equal highs or equal lows, let's look at NQ, for example. Once we see these equal lows, relative equal lows, price is going to hunt these. Once we see equal lows, we know price is going to come back here. We're not going to leave this. We're not going to leave this untouched. We are not. We're going to come back to this at some point in time. But the matter is when. So that's really all I have. For today's session. Today's Saturday. So I thought Friday was very clean. I took one trade. I took a win, but I really wish that I took the sell side of the curve. I took a long. I really wish I was in on a short. But it is what it is. I will see you guys. And is equal lows if we just swept it with a pip? I would not count those as equal lows. But I mean, you could say relative equal lows. Ideally on a higher time frame, if we barely took this low, I would still count it as a generated sell side. But here, I would count these as relative equal lows. I would count these as relative equal lows. But if we barely take it, I would still count it that we're gonna possibly head back. If we barely take it by a tick, we're probably gonna head back there. Anyways, hopefully y'all have a good rest of your day, and that's all I really